All right, we are live. What is going on, my friends? Welcome to the second dividend happy hour of the week. We are doing back-to-back streams this week, guys. So I probably owe you a little explanation. I actually didn't plan on doing any stream tonight. A lot of you guys know we did one last night. And the reason for switching things around this week, my lady and I originally had plans tonight, but those plans fell through, which is why I pushed it back last night. Did the stream last night. I didn't think I was going to be able to do it tonight, but our plans tonight fell through. So I figured, you know what? Might as well come back for round two. So here we are. We're back for another live stream. This one's going to be a little bit more laid back. This one's going to just be kind of hanging out this next hour. We're going to do some live stock research. I'm going to take your guys' requests. Whatever stocks you guys want me to look up, we'll go through. We'll check them out on Seeking Alpha. See what there is to see what there is to learn about these companies. And real quick, let me know here in the chat. Let me know you can hear me, you can see me okay. I just want to confirm. Yesterday, I had a little bit of audio issues. The first 40 seconds of the stream, it was muted. So I just want to make sure everything's copacetic. But at any rate, guys, thank you for tuning back in with me tonight. If this is your second stream, if you hang out or if you tuned in last night, thank you for coming back tonight. I think we're going to have a fun hour. We're definitely not going to be going for an hour and 40 minutes like we did last night, but it'll be a fun stream. I'm excited to hang out with you guys again. But before we get into anything, guys, real quick, why don't you grab your drink of choice for tonight? Whatever you're sipping on, grab that bad boy and let's do a quick toast. I don't know exactly what we're going to toast to, but I don't know. I guess we kind of did the same thing last night, but here's to the official end of the first trading week of 2024. And I apologize. Some of this is going to be a little bit redundant if you were here last night, but let me know a few things in the chat, guys. Just, humor me real quick. Number one, let me know what did you buy this week? Officially, what stocks did you pick up? Some of you guys, I'm sure, made your trades today. So let me know what you added to your portfolio this week to close out the first trading week here in 2024. Number two, let me know what you're sipping on tonight for the dividend happy hour. Personally, I'm sipping on a Sprite Zero yet again. This has been my drink of choice. It was last night. Tonight we're going with it again. Just got to go with what works. But number three, let me know if anything cool happened in your portfolio this week. I want to know if you hit any cool milestones. Maybe you hit 100 shares of SCHD, first $1,000 of annual dividend income. Anything like that. I want to hear about it here in the chat. I want to show some love, put it up on the screen. But real quick, let me go while you guys are telling me all that stuff. Let me go through the chat and see who we have here in the building. I see my man Morik, who says he bought some Johnson & Johnson in Realty Income, as well as a Dutch insurance company. Good stuff, my friend. We got Pietrek in the building just for probably a brief moment because it's very late over there in Poland. It's Saturday. He's a little bit ahead of the game there. He's living in the future. We got Chris here. Good to see you, man. Round two. Thanks for tuning in again. We got Anthony here, 2 p.m. Saturday in New Zealand. Yeah. Striper Kid, is Ryan doing a live chat tonight? I sure am, my friend. I'm happy to see you in the stream here. Kevin slips in quietly. I got to say, Kevin, you always, all of your comments before the stream, whatever it is that you write out, which I want to know what exactly is that? Because it's always very poetic, but it always makes me laugh. You're definitely good at creative writing, my friend. So keep up the good work. I definitely appreciate it. It's fun to read. Thomas is in the building. He says, look up Johnson & Johnson. We definitely will. We kind of talked a little bit about J&J last night, but we can, I don't know, we can give it a little bit of a look tonight again, I suppose. Let's see. We got Lucas wants to know about Walgreens and Fubo. Okay, I think we kind of looked up Walgreens last night again, but we can do it again. Pat's in the building. Good to see you, Pat. We got Robert here. Okay, everything sounds good. We're good. I see Dirac. I see Sir Dude Bro Man. That sucks, Ryan, but yeah, but it's great that there's a bonus episode. I know. But it's okay. That's just how it goes. We had some friends in town. We were going to get together, but I don't know. Things happen. It's all good. I'm excited to be able to stream with you guys again. We had a lot of fun last night. In case you didn't see last night's stream, it went for, I think that was the longest dividend happy hour and the longest live stream I've ever had on the channel. It was an hour and 40 minutes. We just kept going and going. So we're not going to do that tonight, by the way. We're just going to go for an hour. We'll call it good there. But last night was a lot of fun. I see Chris. I see Darius. I see Suzuki Man, who says he can see money. Love it. We got Angel in the building. Unused Soldier, who says, Ryan, how much did you start with and what did you first invest in? I'll circle back to that question in just a moment. Really good question. I'd love to answer that. Let's see here. Lucas says, "Are you going to take some nibbles of apple?" Wasn't planning on it, but let's see. Pat's drinking a chocolate milk. We got Fernando here. Yo, good to see you. Darius probably sipping on a little brewski over there. We got Kahing Yap, my friend, all the way from Malaysia. Good to see you tonight. We got Fast Eddie. Is that the name of your beverage? A bow-legged? If so, I've never heard of that, but that sounds interesting. El Dynamico, my man all the way from West Sac, says, "Hey, I thought there'd be no happy hour today, but I'm glad we're on. I'm having some soup for dinner." Very nice. Yeah, wasn't going to do a happy hour today, but plans fell through. So I figured, why not? What else I got going on? And by the way, guys, I started this book today. I'll talk to you about it in just a moment. Kind of a random sidebar, but I really enjoy it so far. Chris here picked up some VU in Walmart. Frankie actually sold some Johnson & Johnson. Okay. We got Thomas here who bought some Starbucks. Very nice. Some VGT and SCHG and is drinking some water. Good. Stay hydrated, man. Haas here, United Health Group, Johnson & Johnson. Wow, quite the shopping spree. And then Brookfield Infrastructure and Asset Management. Is that BAM? Is that the ticker symbol for that one? Well, maybe it's something different because BAM is just Brookfield Asset Management. So I don't know. Good pickups from Fernando. He got some Apple and Pepsi. Yeah, Duroc says, been loving Sprite Zero lately as well. Yeah, so we've been buying these little cans of, usually it's just Coke Zero because my fiance really loves Coke Zero. I love Coke Zero. Her parents are religious Coke Zero drinkers. And so we buy it at the house. But yeah, I don't know. Just one time she bought Sprite Zero, and it's really good. I've always loved Sprite. It's always been one of my favorite sodas. So you know what, guys? We also have some orange. Is it Fanta? I don't know how you pronounce it, but you know what I'm talking about. We got some orange soda, the 0-calorie version as well. And orange soda is, oh my gosh. Orange soda, I think, is hands down my favorite soda ever. Always loved orange soda. And when I think of orange soda, I always think of Keenan and Kel. I do. Ooh. You guys remember that? I don't know if that was, I probably butchered that, but let me know if you guys remember Keenan and Kel growing up. Let's see. Some of you guys, it might be a little bit, Keenan and Kel might be a little bit before your time. Some of you guys, Keenan and Kel might be a little bit after your time too. But some of you, I know some of you guys out there are going to remember Keenan and Kel. Let's see here. Pat, all-time high. Portfolio's at an all-time high and purchased some Main Street Capital Corporation. Good stuff, man. Good for you. Striper Kid drinking some Voodoo. I think that's an IPA, right? I think you drink that somewhat regularly, if I remember correctly. Let's see. Let's keep going. There we go. That's fine. Like Anthony bought $15 worth of TSOY, 1.41 shares as an experiment. Just going to let it drip and do its job and see what happens. Nothing wrong with that. You're not going to be sweating $15. Whatever happens, happens. And yeah, see how it goes. See what happens with it. And definitely, Anthony, as time goes on, keep us posted, let us know how this TSLY experiment goes for you. I'd be curious to hear. So definitely keep me in the loop, man. I'd love to hear what's going on with it. I'm not going to be adding it to my portfolio, but yeah, I'm very curious to know what you think of it as a shareholder. So keep me posted, man. There we go. So, Phil says bought some Pepsi with all the bad news coming out of the company lately. I haven't really been keeping up with the news surrounding the company, but let's take a spin real quick because you've got me intrigued. So Pep, let's go over here. And I'm wondering if maybe, oh yeah, I did hear about this actually. They had some of their products pulled from France, from the shelves in France. But why is that? I hadn't really read into it. PepsiCo products pulled from Carif. I don't know how to pronounce that, guys. I'm really bad with French stuff. Carrefour. I don't know. Just disregard that. As retailer loses appetite for price hikes. Okay. I see. So they're the second largest retailer in France. Beginning Thursday, they will post a note saying, "We are no longer selling it due to unacceptable price increases." Okay, so Pepsi does not have as much pricing power as maybe it thought it did in France. Products already on the shelves will remain, but will not be restocked. Okay, Their protest against higher prices might be well placed as the company has raised prices for wow. Oh, man. Interesting. Raised prices for 7 consecutive quarters by double digits. Okay. The price hikes in smaller sizes don't seem to have curbed their appetite, though, as revenue grew. Okay. Yeah. Hmm. Let's scroll down. I want to see what some of the comments say. I would think most people would love to see a large company stand up for the little consumer. Imagine if these companies did the same thing. Consumer product. Yeah, interesting. Hmm. I guess at the end of the day, this really, I mean, Pepsi's a worldwide company. They have sales all over the world. So this is just obviously one region. So I would wager what happened to the share price as a result of this news. Over the last couple of days, what's it done? It's taken a dip. Okay, so it's gone not crazy though. It's gone from 173 to 169. So that's really not too crazy. What's it done so far in 2023? This is the first week. It's down 2%. That's not really too crazy. I would imagine, over the long term, in the grand scheme of things, it's not going to be a huge deal for Pepsi. But I don't know. Is there other bad news? Is there other bad news coming out around the company or coming out surrounding the company? I guess I could look, huh? It's still here. Not really. It doesn't look like. They lost their bull rating at JP Morgan on December 19th. So I don't know. Doesn't seem like anything too detrimental. It's not going to put them out of business. And what have make them extinct? I was about to say what happened to the dinosaurs. What happened to them? Words aren't, when you get to be my age, guys, words don't come as easily as they used to. You kind of have to search for them and reach around for them up there in your head. Let's see here. Let's keep going though. Geo says buy some Sprite Zero stock. So, awesomely enough, Sprite is actually owned by Coca-Cola. So by buying Sprite Zero, I am supporting the Coca-Cola company, which is in my portfolio. And I know it's in a lot of your guys' portfolios. So here's to you guys. This is for you. Yeah. But yeah, absolutely. I will continue to buy Sprite Zero at least. And if Coca-Cola comes down in price, I'll probably buy some more of that as well. Let's see. Yeah. So Fernando says, if we're going to look at some stocks, you want to share some thoughts around KHC? I would like to. I think that's Kraft Heinz, right? We'll definitely take a look at that. Let's see. There we go. Coyote says, I'm officially chasing Amgen at 52-week highs. And we'll go into some stocks here in just a moment. Let me just get caught up here in the chat. I'm about 10 minutes behind. There we go. Ryan says, fun to be here. Love listening to you while playing some Starfield. That's great, man. Starfield's did Starfield, the same people that made Starfield, did they make Mass Effect as well? Is that Obsidian? Who made Starfield? Starfield, I think it's Obsidian, right? Bethesda. So they make the Elder Scrolls games, stuff like that. Okay. Obsidian made, I don't know who Obsidian made. I don't remember. I was thinking of the old Star Wars game, Knights of the Old Republic. I don't know if you guys remember that one at all, but I think Obsidian made that one, and I thought Bethesda had a hand in that as well. I could be wrong on that. And I'm actually curious too. No, I'm not curious. Never mind. Doesn't matter. I'm all over the place, guys. There we go. Yusuf says, just getting started into dividends, hoping I can live easy off dividends in the future. Well, my friend, I think if you just keep at it, stay consistent, stay disciplined, keep investing in your portfolio. Most importantly, stay patient. I think you'd be pretty amazed at what your portfolio can grow into over the next 10, 15, 20, 25 years. I don't know how old you are or what your situation is, but yeah, you could really do some good damage across a couple of decades. So hang in there, my friend. Hang in there. You got this. Yeah, Derek wants to look at Pfizer. We can definitely look at Pfizer. That's actually a really interesting one. So we've got a few. We're going to look at Kraft Heinz, Pfizer. I know I'm missing some other ones, but maybe we'll start there and just kind of branch out from those two. Oh, Walgreens was one of them too. So Pfizer, Kraft Heinz, Walgreens. I should probably write these down because I'll forget. You guys will help me remember. So we got Craig, aka SEHD Stan, aka Leroy Skywalker in the building. What's up, man? Happy New Year to you. Hope your 2024 is off to a good start. There we go. Vino officially made over $10 per month in dividends. That's great, man. That's cool little milestone, double digits. So keep it up. Pretty soon that $10 will be $50, and then from there that'll be $100. So good on you, my friend. Let's see. We got Sidine. Did I pronounce that right? Hopefully here. First time here, looking at starting to add SCHD to my Roth with dividend, well, with drip. Long-term investment to complement my other growth ETF. What do you think? Yeah, I think that's, well, I don't know what the other growth ETF is, but I think that sounds like an overall pretty well-balanced approach. A little bit of dividends and dividend growth with SCHD and a little bit of share price appreciation from your other ETF. I think that's probably pretty solid. So yeah. Let's see. Let's see. Keep going here. Yeah, Sprite and Dr. Pepper for the win. Absolutely. Oh, Orange Crush. There's something about Orange Crush that above all the other orange sodas, above Sunkist, above Fanta, there's something about Orange Crush that is just hard to beat. I think it's a little bit, maybe it's a little bit less carbonated than the other two. I haven't had an Orange Crush in a long time, but it's also just such a classic beverage, just like Coca-Cola. Crush is the same way. We've probably talked about this before. Do you guys remember Jones Soda? Have you guys ever had a Jones Soda? Let me know in the live chat or in the comments below if you've had a Jones Soda. Man, I used to demolish those. As a kid, I remember going to Warren's Market in Yuba City, and my grandparents lived right around the corner from there. My high school was right down the street from there. And so every time I'd go in there, I'd want to get a blue bubblegum Jones Soda. That was the only place growing up that I remember they had it. And it was still one of my favorite sodas. There we go. Oh, yeah. You guys talking about Keenan and Kel, little good burger. I see that. Uh-oh. Blaze is rolling down the street, smoking endo, sipping on gin and juice, laid back. With my mind on my money and my money on my mind. There you go. Stacking cash. Fun fact, Snoop Dogg is hands down one of my favorites of all time. Love Snoop. SNOOPDOGG. Yeah, Shamir, I thought you were going to do a stream this evening, Ryan. I wasn't planning on it, man. And my fiance and I initially had plans tonight. I wasn't going to be around, which is why I wanted to do the stream yesterday, which is why I did it yesterday. But our plans fell through for tonight. So I was like, you know what? I knew there was going to be a lot of people who, and I see this is true just by the number of people in the stream right now. There's going to be a lot of people who wouldn't be able to make last night that I knew would be able to make tonight. And since the plans fell through, I had nothing else going on, and I love doing this. So I was like, you know what? I might as well just hop on for another stream. What else am I going to do? I could. I've read about. I was going to talk to you guys about this too. I really don't have much to say. I've already read about 30 pages of this book today. And very easy read, by the way. It's going to be a really easy book to get through. Honestly, I bet I'll finish it in the next 2 weeks. But yeah, I didn't have anything else going on. So I was like, let's hop on the stream and talk some stocks. Everyone wants to talk MPW. Yeah, okay. So why don't we just get into it, guys? Okay, I see. I'm scrolling down in the chat. Okay, never heard of Jones Soda. Okay, you can't really find it many places anymore. So, oh, there we go. Sir Dude Bro Man knows what's up. I'm jonesing for a Jones, and Blue Bubblegum was my favorite as well. Yeah, love it. A little Eminem and Tupac. Yeah, nice. You know what? For the first time, the song. I think it's "Bumpin' Heads" by Eminem. I think it's one of the Ja Rule diss tracks. I think it was Ja. I just heard that for the first time like a couple weeks ago, and that's a really good song. Another one is "Go to Sleep." Have you heard that song? It's Eminem and DMX. Oh my gosh! If you guys are looking for a good workout song, yeah, thank me later. But anyway, guys, let's jump over to Seeking Alpha. Let's get into a few stocks here. So we were going to start with, what were the three? I know Kraft Heinz, Walgreens, and Pfizer. So why don't we start with Pfizer? Then we'll jump over to Kraft Heinz real quick, and we'll spend a few minutes on each one here. We'll take a look at the financials primarily, take a look at the dividend stats, and just some basic stuff to see what's going on. Yeah, Kill Shot, that's another great track. Yeah. Here we go. Okay, sorry, just looking at the chat. So here we are on Pfizer. Obviously, guys, as many of you know, Pfizer has not had a great year. The share price movement of this company has been really interesting. They had a really impressive run up from the pandemic, as many of you guys know. I mean, for obvious reasons. They went from pandemic lows of about where they're at now, actually $29, $28 a share, all the way up, and they peaked at, which is pretty crazy. It peaked at like $60 a share. So, twice what the share price is now. But as we've come out of the pandemic, obviously the share price has really taken a hit. And when we go and look at the financials, it's really not going to be much of a surprise, right? So if we go look at this, really, really big jump in revenue. The prior to COVID right here, 2021 and 2022. Interestingly enough, this company was really bouncing around with sales, 50 billion, below 50 billion, 40 billion for 2018 and 2019. So they really took a big hit between 2017 and 2021. But, in the midst of the pandemic, knee deep into that, they were selling so many vaccines that the sales pretty much doubled for these 2 years, right? And so what we're seeing now is more or less a return to homeostasis, a return to, I guess, like a reversion to the mean, I guess, is probably the best phrase for it. Now that we're out of all that stuff, they're not generating as many sales from vaccines, so these sales are coming down, which is why we're seeing that share price take a hit. But otherwise, I don't know. Let's see what's going on with Pfizer. Otherwise, so along with this, guys, let's take a look at their profitability. This is really, I actually didn't realize this until kind of just now, and this could be some lingering effects of the pandemic, like the vaccine sales. The vaccines might not have been a huge profit driver for Pfizer, and I'm judging that based on how their profit margin trended basically prior to the pandemic. And I'm just thinking out loud, by the way. Prior to the pandemic until about now, we see it goes from the 80s, which is really good. Like an 80% gross profit margin is solid. If you were to read Warren Buffett in the interpretation of financial statements, they would tell you a gross profit margin over 40% is, something to maybe look further into. It could be an indicator of a durable competitive advantage, that according to that book. No, Pfizer definitely has that locked in pretty good. The pandemic, though, 2021 and 2022, when their sales skyrocketed, the profitability dropped big time, which leads me to believe, is assuming a lot of those sales did come from, vaccines, that might not have been a huge, highly profitable product for them. But nonetheless, still decent margins, 62, 66%. That's pretty good. But in the trailing 12 months, it's down even lower. So I would be interested to see as time goes on what this gross profit margin does from here, if it continues going down, or if we see it kind of getting back to where it was prior to the pandemic, more so these type of numbers. But anyway, going further down the income statement, looking at the operating margin, we see kind of an interesting trend here with the operating income and the operating margin. So while we saw the gross profit margin going down these years, we actually saw it jump in these years. So that's pretty interesting. And we see it really drop, though, in the trailing 12 months. So I don't know. That's kind of interesting. But continuing to go down here, the net income margin's kind of all over the place. On an absolute basis, though, the net income's actually looking pretty good. We can see at least from 2018 to now, it's trended upward. There's been a little bit of up and down, but some pretty aggressive growth there. So overall, I don't know. I think Pfizer's just kind of one to keep an eye on and see what happens from here. But and we'll go look at the dividend stats. We'll go look at let's take a look at the balance sheet real quick too. But before we get to that, I mean, they've been buying back shares, which at least, let's look at this on a quarterly basis, actually. Because I think this will be more relevant for this time period. So it doesn't look like they've been issuing shares these last few quarters since 2021. When at least this year, when the share price is down so much, it'd be nice to see them buying back shares, right? Because the share price is just so dang cheap. So that's been kind of interesting to see. What else here? The payout ratio has been pretty steady, more or less, I'd say. Pretty healthy payout ratio, except in 2023 it was about 100%. But anyway, let's go over. We're gonna go look at this on an annual basis again. Let's look at the balance sheet. From what I remember, the balance sheet actually looks pretty good. I don't remember them having a lot of debt. Yeah. So, I mean, debt over the years has been more or less pretty steady. But as of their last report, wow, they actually did issue a lot of debt here. Um, they now have 64 billion on the balance sheet compared to 39 billion at the end of 2022. But then again, on a net basis, this is interesting. On a net basis, the debt's still looking pretty solid. I mean, it's not much different than 2022, right? So on a net basis, it only jumped $3 billion, which leads me to believe maybe their cash went up. Yeah. Okay. So their cash and mainly their short-term investments here really jumped year over year. So, debt situation, that doesn't it's not too alarming, I think, just considering when you compare it to the immediate assets they have. Looking at the cash flow, still, I mean, no surprise too. Just the cash flow from the vaccine sales uh, really looks good, and even prior to, it's not been too bad. I mean, if we look at the numbers prior to that, like they could pay off all of their net debt right now with 1 year's worth of free cash flow based on all these numbers here, but in the trailing 12 months, the free cash flow has actually been negative. Interesting. Well, according to this, the levered free cash flow has been negative. But if we look at the free cash flow per share, it's still in the positive. So that's kind of interesting. And let's see here. In the trailing 12 months, what's the free cash flow payout ratio been? $1.45 in free cash flow per share against 163. So the free cash flow payout ratio is a little bit over 100% in the trailing 12 months. But they have so much free cash flow left over or they generated so much free cash flow in the prior years that maybe that's not too alarming yet. But I will say that is something to keep an eye on with Pfizer and see what happens with that free cash flow payout ratio. Looking at the dividend stats, as I'm sure you guys can imagine, the yield is really soared. I mean, we're coming in close to a 6% yield, which if we compare that against the 5-year average is way higher. Geez, 50% higher. And if we scroll down, actually looking at this dividend yield chart, look at how much it's climbed just in the last year and some change. So at the end of 2022, we're looking at about a 3% yield. And there was a point recently, actually, at the end of December, looks like it reached over a 6% yield. So yeah, that's interesting. It's just been really interesting to see what's happened with this stock. But, according to this, I mean, the payout ratio, 57%, if that was true, that's not too shabby. 5-year growth rate, decent. I mean, you're getting a moderate dividend growth rate with a relatively high yield at this point. So I'd say that makes sense. Dividend growth of 13 straight years, not too bad. And I know they have a history of paying it even longer. So they've been making payments of the dividend for 34 straight years. When did they not? Looks like they cut it during the great financial crisis right here. But yeah, since then, they've been growing it back. So the thing about Pfizer, I don't know. I definitely think it's one to keep an eye on. I'm very interested to see what happens with this company from here once things kind of level out. And the share price, once it kind of stops being a falling knife in terms of share price, I'll be interested to see what sales do. I'll be interested to see what the share price does from here. But I think it could be one to keep in the back of your mind. I'd be hard pressed to believe that Pfizer's going to be going out of business anytime soon. So I don't know. I think it could be one to watch. And we definitely spent a decent amount of time on this one. But Dan says Pfizer is a hot garbage dividend stock. I'm calling my shot. Yeah, I mean, I don't know. I definitely think it looks different. Looking at the income statement, I definitely think this looks different. Like if we were to compare it to something like, let's compare it to something like Snap-on. Just look at the difference in sales. I mean, just you're seeing a solid upward trajectory in sales there. We're not really seeing that with Pfizer. We could see, I don't know. That's why I'm saying let's just see what happens with it from here. I don't know. I don't quite know what to make of it moving forward, but I know right now it's probably one to just let fizzle out because the share price has really, really just been a falling knife. So, but anyway, let's keep going. Let's look at KHC now. So KHC, Kraft Heinz company. And before we even look at any of this stuff, I want to go over to the website and just get a quick refresher on all the different brands that Kraft Heinz owns. So let's look at brands here. We got obviously ketchup, Kraft, right? Mac and cheese or Ida potatoes. You got Oscar Mayer. Really strong brands. Velveeta, Classico. They make like spaghetti sauce and stuff like that. Smart Ones, I'm not familiar with. Is that like, I don't know. Let me know in the live chat what Smart Ones is because I'm not familiar with that. I'm not familiar with ABC. Capri Sun, very familiar with that. Kool-Aid for sure. Jello, Philadelphia, cream cheese, love that stuff. Lunchables. Maxwell House, I don't hear much about Maxwell House. Grey Poupon, okay. And some of this other stuff here. I don't really know these, but I definitely have seen some of these logos before. So a pretty solid lineup of brands. So I don't know, pretty solid lineup of brands, I'd say. But let's go first look at the share price here. So it's year to date, obviously. Last year, it's down 8%. Last month, it's up 6%, so pretty solid month. Sales, wow, interesting. Really solid jump in sales from 2014. I guess this would be 2015. Really big jump in sales here. I'm wondering, let's look at the goodwill because I'm wondering if they made some acquisitions in that. Yeah, okay. So that's exactly what happened. So, okay. So what we're seeing here, guys, if I'm understanding this correctly, and just so you guys know, I'm still learning a lot of this stuff, but this jump right here going from 11 billion in sales to 18 billion in sales just in 1 year, that's pretty astronomical for a company as mature and just based on the nature of the company itself too. So that's very like when I look at that, I think there's probably only one thing that caused that, and that's they probably bought up some other brands or bought up some other company or companies, and that's what added to their sales for the year. And we can see that was the case here in the goodwill. So this goodwill essentially reflects the amount that the company paid over the fair value when they made an acquisition. So we can tell right here, which is the same time period that we saw that big jump in sales, we see a jump in goodwill, which means that they made some acquisitions here. So that's definitely the case. And the goodwill has gone down over time since then. But so that's what happened there. And pretty big jump too from 2016 to year over year here as well. So, but since then, it's actually the sales have been really stagnant. So it doesn't seem like there's been a lot of organic growth from Kraft Heinz since, I don't know, it's hard to tell since how long that's been, because of this big jump here. Since they made these acquisitions, though, the sales have been really flat. With that said, though, they've really done a good job of increasing their profits. We're going to see a really solid gross profit margin expansion here. Oh, no, maybe I was looking at that wrong. It's all gone up a little bit, 30. I guess it's stayed pretty steady. Why was I? Yeah, okay, that's why. Anyway, gross profit staying pretty steady, mid 30%. Let's scroll down. Their operating margin looks pretty decent, though, I guess. 20% pretty throughout. That's steady as well. Net income margin's a bit all over the place. Not too bad in the trailing 12 months. Revenue per share has gone down. They've issued a lot of shares, which came with the acquisitions. So let's see. Earnings per share has been going down. Normalized earnings per share has been going down. They just went through a dividend cut recently, it looks like, in 2018. And the dividend stayed pretty flat since then. And I don't even know if I want to look at this any further. It just doesn't seem like there's really much to like about this company. I don't know. I don't know. What do you guys think too? Is there anything? I see more reasons maybe not to think of this as a good long-term investment than a good growing long-term investment than I see reasons to think of it as one, if that makes sense. So I see more cons than pros, but I'm curious to know here in the live chat, for those of you guys who do like this company or who asked about it, what do you see in the Kraft Heinz company? What are you liking about this? I mean, looking at the dividend stats, the yield's okay, 4.2%, but that's such like on the list of priorities, that's such a low, that's so low on the list of priorities. Payout ratio's fine, 50%, moderate. But we got that dividend cut here. That's why we're seeing we already established this. We already saw the dividend history there. So I just don't know that there's really, in my opinion, there's not really much to like about the Kraft Heinz company other than it's an iconic company. It's been around for a long time. They have definitely a solid roster of different brands under their umbrella. But I'm looking at the numbers and the trajectory, and it doesn't look like there's really any growth in the company, which is why you're not seeing them able to grow the dividend, and in fact having to reduce the dividend. And so it's not one that I personally would want to put money into. But yeah, I'm curious to know your guys' thoughts on it too. So let's see. Okay. Yeah. Okay. Going back to Pfizer real quick. It's Pfizer's management. Yeah. And Pfizer, especially over these last few years, Pfizer's become a really polarizing company. So I get that. Let's see. Heinz in Canada shut down a plant. There was a boycott. Okay. Interesting. French's taste better. Let's see. Smart Ones is a frozen food, healthy kind of. Okay, good to know. Yeah, Shamir says it doesn't really appeal. Phil says the same thing. Doesn't see what Buffett sees in it. And Buffett, I don't know when Buffett bought it, but it perhaps could have been at a time where it was a much more attractive company. So it's not like I don't think he bought it. He didn't buy it in the last year or anything like that. I think he's owned it for a long time, right? So when he probably bought it, there was a lot more to like. When he bought it, there was probably a lot more to like about it. So let's see. I see my man Tortoise in the building. Hope you're doing well. Same to you, my friend. And real quick, guys, if you haven't already, definitely check out Tortoise Investing's channel. He's putting out some really good videos, sharing his portfolio. He's a diehard dividend investor as well. I think you guys will really like his channel. And also, going back to Dan here, definitely check out his channel as well. Dan really knows his stuff. And I really enjoy watching Dan's videos because I learn something new every time. So definitely check out both of those guys. And you guys will not be disappointed. So let's see here. Coyote says it might be good to add to the doomsday portfolio waste management too. I definitely think waste management could be a good one. I see when I think about companies like waste management, and I was talking to Russ and Harris about this recently. I can't really think of what could come in and disrupt a company like waste management. Like what could come in? And this is an open-ended question for you guys too. Like I want to know if you guys have any ideas on this. I just can't think of what could possibly come in and disrupt what waste management does. And Republic Services, I think it's RSG is the ticker symbol for that one. Yeah, RSG, Republic Services, which is the company that does my trash here. I see their truck all the time. So I just can't think of what could come in and disrupt that. But yeah, let me know if you guys have any ideas on that. We'll move on to, excuse me, guys. I'm so sorry. We'll move on to Walgreens in just a moment. And I see some stuff on MPW too. We can take a look at those guys as well. But Steven, first, before we get to that, Steven wants to know, Ryan, what watch are you wearing tonight? This, my friend, is my Bulova Marine Star. You can hear that. Hear the jingle jangle. This is my Bulova Marine Star. I don't know if it'll focus on here. So this is my uncle's watch. My uncle worked for Chevron. His career was at Chevron. So he worked there for many, many, many years. And he got this watch back in the year 2000. And he got this watch to honor his 30th anniversary working with Chevron. And it says it on the back here, which is really cool. But also what's really cool about this watch, I don't know if it'll focus on, if you guys can see this. And by the way, if at some point you guys ever want, I'd love to, on one of these streams, show you my entire watch collection. I don't think it's really relevant to the channel, but I enjoy talking about it. I think some of you guys do too. But anyway, you can see this little thing right here. I don't know if how you can see the Chevron logo right there. So I thought that was a really cool thing. And it's, I also have Chevron in the portfolio. So it's just really cool this is one of my favorite watches for numerous reasons. But yeah, that's what I got on tonight, my Chevron watch. So My uncle Drew's Chevron watch. Let's see here. Let's keep going though. Uh, let's keep going. Yeah. Okay. So we are on. What was the next one? Walgreens. Walgreens, and I might start to sound like a broken record a little bit with Walgreens because we looked at it last night, and I also talked about it a couple weeks ago in a video that was talking about like 3 stocks you're gonna regret buying. Walgreens was one of those companies, and in the video I referred to Walgreens as being a value trap and also possibly a yield trap as well, which, as we've come to find out, was the case. Um, and I used to have high hopes for Walgreens. I don't know. I used to like this company. I think more than I do now. But anyway, going over here, taking a look at. Let's first take a look at there before we get ahead of ourselves. Let's take a look at the share price. So it's not been good year. Well, year to date. That's gonna take some adjusting, guys. I'm always used to looking at the year to date performance, but it's useless on January 5th. So looking at the performance over the last year, they're down 29%. Across the last 5 years, it's really abysmal. They're down 65%. So that's not great. I don't even want to know what the total return is on this company over this time period. It's I mean, it's a little bit less than 65%, obviously, but anyway, not great. Now going over to the income statement, in their defense, they are increasing their sales. They saw a huge jump between 2014 and 2015. Maybe an acquisition. So yeah, I mean, we see once again, we see a nice goodwill jump right here. Going goodwill hunting, dive in for that goodwill. We see that big jump right there, which means that they bought something, which explains this jump in revenue. But even since then, it's actually not been too shabby. I mean, after the acquisition, they went from 103 to 117, 118, 130, and then down a little bit for a couple of years, then back up. These are the pandemic years. These are the 2 years that we saw Pfizer really take off. And even in 2023, they had their best year ever, $139 billion in revenue, and in the trailing 12 months, even more, 142 billion. So they're generating a lot of money, guys. But the thing is, looking at how much this revenue has climbed over the years, the revenue's almost doubled in the last decade, right? Look at the gross profit. It's hardly budged. It's gone from 21.5 billion in 2014 to 27 billion in this last year. And if we look at the gross profit as a percentage of revenue, we're seeing a lot of compression here in their margin. So that's not great. Over time, this company is becoming less profitable. That's not what you want to see. You want to see steady profits. You want to see increasing profits. Maybe a slight dip here and there can happen for sure, but you don't want to see this. And as we continue down the income statement, we're going to see a very similar trend. We're going to see the operating margin go from 5% to less than 1.5%. And then the net income margin is, kind of similar as well, going from, it's actually kind of bounced around a little bit, right? It's stayed pretty decent, at least since 2019, then a huge drop, in these years here. 2022, it was back up. 2023, it was down actually in the red. And then it's barely positive here in the trailing 12 months. So overall, guys, I just, seeing this is just these are a huge red flag. When you see this happening, a company with diminishing margins, and those of you guys who know about this stuff more than I do, like, fact check me on this, please. But my understanding is that seeing this sort of compression, seeing the margins trend that way, you're not going to find a company like this is not going to have a durable competitive advantage. So I don't think this would check a lot of Warren Buffett's boxes. And so personally speaking, I would not want to invest in this company. And thinking about it qualitatively, not numbers aside, thinking about it qualitatively, I can't really come up with a good differentiator for this company. What does Walgreens have to offer that you can't get from Walmart or CVS or Target, which has CVS pharmacies inside of them, Kroger, which also has pharmacies inside of them? What is unique to Walgreens that gives them some sort of advantage? I really can't think of one. And because of that, this is a company that I don't know that I would ever buy. Now, a lot of investors still, with that said, prior to this cut, I mean, for those of you who haven't heard the news, yesterday Walgreens reduced their dividend here. So, looking at the news, we did talk about it last night once again, but we'll show it here as well. So they halved their dividend to 25 cents, taking it down 48% from 48 cents per share per quarter to 25 cents. So prior to this cut, the yield was looking really good. So that's where I was kind of looking at it as definitely a value trap because it's, as we've seen, it's really come down in price, but also a potential yield trap. That yield was way up there, guys. Still, it's not, it's still up there even after the reduction of 4.12%. And if we look at this chart here, I think it'll show us, yeah, there was one point before the cut. At its peak, it was about 9.5%. So definitely attractive to a lot of income-seeking investors. A lot of people would look at that and just start seeing dollar signs, thinking they're Scrooge McDuck. But once again, guys, the dividend yield is, when analyzing companies, when looking at companies, the dividend yield is so low on the list of priorities. There are so many other things you should look at before paying much attention to this. I mean, it's good to know the dividend stats. As dividend investors, we want to know that information, but you should not make your investment decisions based on yield alone. You do not want to chase yield, because this is what happens. You get stuck with companies, not every time, but you can get stuck with companies. You expose yourself to the risk of investing in companies that do turn out to be yield traps. So hopefully all that makes sense. That was Walgreens. We were going to look at MPW, but let me see what's going on here in the chat. Yeah, Robert here says, I would love to see the watch collection. Well, sometime I'll show it to you. And you know what? I've been thinking through, the deeper that I get into watches and the deeper that I get into investing, the more I'm seeing parallels between the two. Picking individual stocks and exploring the nuances of different sectors and industries and individual companies is not unlike, and crafting your portfolio based on that sort of stuff is not unlike building a watch collection. Because people, and I promise I will not go on a super long tangent on this, but we're on the subject. People look at watches and a lot of people think, first of all, people think, why would I have a watch when I've got my phone, which is honestly like a very fair thing to say. Like, for just being practical, you really don't need one. You really don't. You can make an argument for an Apple Watch because there is definitely some utility there. But as far as these type of watches, these classic watches, a lot of people don't get it. And honestly, I didn't really get it for a long time either, until recently, like in the last year. But I don't know, there's something about it. Sometimes you can't really put your finger on these things, but some things just start clicking with you and start, piquing your fancy or tickling your fancy. I don't know, whatever the phrase is. And for me, watches became one of those things. So you just, I don't know, where you get interested in this stuff. You start learning about the different nuances. Once again, people just look at watch and think watch, but there's so many different kinds of watches, in the same way that there's different sectors. You've got industrials, technology, materials, utilities, financials, you name it. Well, with watches, you've got dive watches, you've got dress watches, you've got everyday watches, you've got smart watches, you've got what else you got? You've got chronographs, you've got all these different kinds of watches. And when building a collection, you take that stuff into account. Okay, I could probably use a dress watch for this situation. I could use a dive watch for this situation. I could probably use just like a beater watch, just kind of an everyday grab and go sort of thing. So you start to think about the nuances, and you start getting into different brands in the same way that you start getting into different companies, and start understanding the movements of the watch. And you learn to the deeper you get into it, the more nuanced you realize everything is. And that's the case with everything. Anyway, tangent over. There's a lot of parallels between the two, is what I'm trying to say. And so I guess with that said, I'm starting to think of my portfolio a bit more as a kind of a collection. It's fun. So when people ask, like, why would you want to invest in individual companies? It's like, I don't know. Like, why do people collect rocks? Why do people collect old matchbooks? Why do people collect collect wine? So many different things you can collect and get into. I think investing in companies is just another one of those things, and I don't know, it's fun. So okay, we're gonna sorry guys, we're gonna talk about we're gonna talk about MPW. Yeah, sorry, I'm just getting caught up in the chat. We are going to where are we at here? Let's see. Okay, here we go. We've got about 10 minutes left in the stream, guys. Yeah, there we go. Dex says, why would I need an iPhone if I have a calculator watch? There you go. It's kind of the inverse of what I was talking about. Okay, so let's go back over here. Let's take a look at MPW. And truth be told, guys, this is the first time I've looked at MPW in a long, long time. So I think the best place to start really is just with the recent news. And I guess it was a couple months ago now, there is a company called Viceroy that put out a short report on MPW, basically saying, let's see if we can find it here, because it's got to be somewhere in this. It was a pretty big deal. I think I'm going too far back. So we want this piece of news right here. We'll look at that. Let me just look up Viceroy Medical Properties Trust. Okay, so let's go to news. Anyway, long story short, if I don't find it, there's a report company that researches different companies or whatever. They put out a short report against Medical Properties Trust. I don't remember exactly what was in the report. Maybe it had to do something with what actually happened, where basically they said MPW wasn't going to be able to collect rent from its biggest tenant, which is a company called Steward. And actually, MPW ended up suing Viceroy. We can see here. MPW files lawsuit against Viceroy. Let's see if maybe this will give us more information. This is probably what we're looking for. So, okay, thank you. Okay, where does it say? The lawsuit's been filed. They're naming, okay, MPW claims that Viceroy, they're targeting MPW for short and distort attacks. Short selling is not illegal, but maybe they're basically saying that Viceroy is saying all these things to lower the share price, which maybe would benefit Viceroy, who has a short out on the company. If my understanding's correct, I could be wrong on that, but apparently Medical Properties Trust, I don't know. It seemed like from the headlines we saw there, it was working out for Medical Properties Trust. So I don't know, but it ended up being, Viceroy ended up not being too far off. So what happened with MPW is they announced that it was right here, right? January 5th. Yeah. Said it had taken steps to recover uncontrolled rent from troubled tenant Steward. The hospital landlord said that it's granting a bridge loan to Steward, which is about $50 million behind in rent. So, okay. So basically, Steward can't pay its rent. Therefore, MPW is loaning money to Steward. Okay, this is just a whole mess. But anyway, not good news for Medical Properties Trust. They've been in the hot seat for pretty much all year. And in the last year, they dropped 70%. Really, really not great. And if we look at the financials, guys, and they even experienced a dividend cut as well sometime last year, if I remember. We'll look at that momentarily. I will say this, though, in the defense of MPW. This is probably the only thing I'll say in defense of them. Really solid revenue growth for the most part. The last couple of years have been not great, very flat between 2021 and 2022. And in the trailing 12 months, it's even lower, at least in part due to their issues collecting rent from this tenant Steward. But prior to, you're seeing a lot of really solid revenue growth coming in from MPW, operating and going up. And I think we'll probably see the FFO, the funds from operations, and the adjusted AFFO, or the adjusted FFO, doing the same thing. So they didn't report any numbers here between 2019 and 2020, but excluding those years, we see more or less like a pretty decent trend in the FFO department, right? Up until this point, really, where are we here? FFO. So 2021 was kind of the last good year. And then since then, it's been going down. So 976 to 934 million to in the trailing 12 months now, basically in 2023, 870 million. So the FFO is going down, and that's not a good sign because real estate investment trusts use this FFO, this funds from operations, that's what they use to pay out the dividend. And what we'll see here, I believe, where's the FFO payout ratio? I know it's right in front of me, right here. Okay. Interestingly enough, the FFO payout ratio went down, but that's probably because MPW cut the dividend or reduced the dividend at one point. So anyway, so how do we sum up MPW here? So FFO is going down. Doesn't bode well for the dividend, but simultaneously, while that's happening, they're having these issues collecting rent from their largest tenant. And I don't know what percent of revenue Steward makes up for MPW. But nonetheless, their largest tenant, number one, they're having trouble collecting rent. Number two, they're loaning even more money to this company to keep them afloat and keep the lights on and stuff, hoping that Steward will be able to fix their situation and start paying MPW rent. And not a good situation. So based on that, that's what we're seeing. That's why we're seeing such a big drop here in share price. It just, the situation seems to be getting worse for MPW. And there's probably a lot more to the story that I'm missing because once again, this is my first time in a long time paying attention to MPW just because I've kind of written it off as like a no-go. So it's really been out of sight, out of mind. But at the same time, like a lot of this stuff, the Viceroy research stuff, what they're dealing with their tenant, it's a bit over my head. So admittedly, I don't quite understand it a whole lot. I'd have to spend a lot more time with it to really wrap my head around it. But I do know this. The yield has been really high for MPW. It's been one that actually, before I even get to this, just closing that thought, because it is important to say this. Based on that, I don't know what could happen from MPW I don't know what could happen with MPW from here. I don't know. I don't think this means that the company's going bankrupt or anything like that. But this is definitely a situation they'll want to have dialed in. Okay. Now going to the dividend stats, they've had a really high. I mean, as time goes on, the yields and the share prices come down. The yield's been getting higher and higher and higher. At one point, it was up to, geez, I didn't even realize this. At its highest, it was at 25% mid-November. And this is about where they cut the dividend because the yield went from 25% to about half. Well, I guess now it's, according to this, it's like as of yesterday, it's about 18%. So it's still high. So it's kind of been one of those yield traps for a lot of investors. And it's just really been a sinking ship, unfortunately. Yeah, they cut their dividend here back in September, November. And I think there's two different ways to approach a company like this. I mean, undeniably, it'd be kind of a risky one to put money into because the situation seems really uncertain. So there's going to be a lot more risk putting money into something like MPW than there would be, so many other different companies. Like you're going to have more risk with this than you will with Procter and Gamble and Coca-Cola for sure. Now, depending on what you think and depending on how you think this will play out, this could be, number one, it could be a value trap. It still could be a yield trap. Or number two, it could be like a good opportunity to buy a really beaten down company that at some point will turn things around and see a more positive trajectory. And like I said, I don't know what's going to happen. I don't really know enough about the situation. But I think those are the two outcomes. Speaking personally, I wouldn't want and I think what you do from here with it, if it's something that looks intriguing to you, I think it depends on your risk appetite. And I think it depends on just how froggy you're feeling. If you want to take a chance on it, just know that that's kind of what you're doing. But personally speaking, I don't have any interest in putting money into something like this when I could be buying Snap-on or Starbucks or Visa or Procter and Gamble or Realty Income or you name it. So that's kind of my take on it. Probably, definitely not the most in-depth analysis of medical properties trust. There are a lot more people who know a lot more about the situation than I do. But we'll see what happens with it. I'll be very interested to see what goes on with MPW from here. So, but interestingly enough, I'm actually all caught up here in the chat. So, see what I missed here. Nothing really, actually. Yeah. Tortoise says, this is kind of an interesting point. Intel is a unicorn. They cut their dividend and was able to bring it back. I don't see that happening with MPW or Walgreens. Yeah. And, kind of on the same note, WP Carey is a company that I have in my portfolio, and they recently cut their dividend as well. That was a whole nother ordeal. They were spinning off their office properties and as a result of that, reduced the dividend. So I'm interested to see what happens. I'm hoping that will be another like Intel situation, but we'll have to see. But yeah, so getting back to the comment, Intel's a unicorn. They cut their dividend and were able to bring it back. I don't see that happening with this one. Shamir says, I never really saw the appeal of MPW. First, it was a hit for yield chasers. Now it's being pumped up as a turnaround play. And it could be, I don't know. It could be a turnaround play. But I think Warren Buffett said like turnarounds rarely turn. So I don't know. Let's see what happens. I mean, Intel, the verdict's still out on Intel too. In terms of share price, they've had a really good year, but I don't think the story is over yet for them. Let's see what happens. So, here we go, guys. Thoughts on Coney. We'll look at that in a second. We'll make the last stock of the night. I want to, before I get to that one, I want to just answer this comment real quick. Durak, I apologize because I saw you ask this a couple times tonight. Have you ever ridden one all the way down to the ground? Is that what this looks like? I am proud to say that I have never, well, I don't think I've ridden one all the way down to the ground like this. And I don't have MPW, but I'd say the closest that I got to that was 3M for sure was the closest I got to that. And that's been the stock that I've seen the biggest loss on. So I definitely took a hit on 3M. Intel, I was seeing quite a loss on for a while, but I ended up selling that one for a little bit of a gain. So happy there. I'm seeing I've ridden like AT&T and Verizon down quite a bit. We'll see what happens with those guys. Kind of actually had a pretty solid year so far. And then there's one more that I missed. KRC is another one. I started buying KRC like in the 50s, which I don't know. But anyway, not a lot, thankfully. I started buying KRC in the 50s, and that one really, that got down into the upper 20s. You know what I mean? And so luckily my average cost I was able to bring my average cost down to the low 40s. Or actually, no, I'm sorry. I was able to bring my average cost with KRC into the mid 30s. So I started buying shares in the 50s. My average cost right now is in the mid 30s. So, but I rode that one down pretty hard. But now I'm actually up on that one as well. So it ended up working out. So, but yeah, I look back at the KRC thing and I was like, dang, I'm really glad that I averaged down on that one, because man, if I had just loaded the boat at the $50, price point, I would be definitely probably not feeling too good. But let's go back to Coney real quick. And then we gotta call it a night. I promised my fiance I wouldn't do what I did last night and go for an hour and 40 minutes. So CONY, which is dun dun dun. It is a yield max fund. So just in general, guys, I'll my thought on something like this ETF here is very similar to what my thought is going to be on TSLY. I just I don't know. I just don't know why you would want to own something like this. Yes, it's got like an 18% yield, but guys, there's just so much more to investments than these yields. And I don't know what's it done so far. What's the dividend done so far? I mean, okay, it's gone up for the last few months. I'll give them that. But it's like 3 months, that is not enough time to gauge the long-term performance of this fund. What's TSLY done? What have the distributions done for those guys? Yeah, I mean, yeah, this hasn't been looking that good either. It's more or less trended down over time. And I don't know, depending on what happens with Tesla, the distributions could continue to stay down. I just don't know. I don't know. But I don't know. Long story short, I don't know why you'd want to own something like this. It's got a yield for sure. It's got a high yield, but I don't know. I just think overall, I just think in general, and this is one of the reasons I sold out. This is probably the main reason I sold out of Jeppy, which I think was fine. Was more a better covered call ETF than these guys right here, the yield max ones. But what the main reason I sold out of Jeppy was just because I don't know. I guess I realized there wasn't really anything more to owning something like that than the current yield. And in any other instance, if I had to take my own advice, I would say that's not a good reason to own something. That's not a good reason to hold something. And therefore, in regards to Jeppy, I felt that wasn't, because of that, it just didn't make sense to have it in the portfolio. From a long-term perspective, I'd be better off in a business that's gonna grow, that's going to increase in capital appreciation and dividend income over time, that's going to continue to reward me as a shareholder in various ways: share price performance, dividend yield, dividend growth, share buybacks, and generate an overall, hopefully rock solid total return across a period of time. And something like Jeppy or like TSLY or CONY, I just think unless your sole goal really is to just see those dividends come in and just go 100% for that income, then I don't know. Otherwise, I just really don't see the point. So, and I think when you look across a 20, 30, 40 plus, 50 plus year period of investing, which, remember guys, when you have these portfolios, are going to exist long after we're gone. Ideally, you build this and you pass it down to the future generation, who hopefully you can coach and teach, and be a good steward of that, and basically pass the torch and see it continue to grow. When the longer time period that you zoom out, the more something like total return and dividend growth becomes more important. Because at a certain point, your yield on cost with something like that's growing is going to, basically, the cash flow that you'll be generating in relation to the amount that you have invested, it will grow to a point that it surpasses a lot of these high yield investments. It takes time, and a lot of people don't have that patience. But I think if you're someone that has time on their side and you should look for something more like that instead of something like this. Hopefully all that makes sense. A lot of that was just, obviously I was thinking through that as I was saying a lot of it. So, but that's my take on the whole thing. Yeah, you said pull up the dividend history for TSOY. I'll pull it back up. But yeah, it's not been great. I mean, it's really been all over the place. And but overall though, it's trended down. So you can see that here, right? Down, then it was up, and then it was down. So we'll see. Over the course of numerous years, I think the popularity of these will phase out, and there will be some other new shiny object to take its place. And at the end of the day, that's really all this is. It's just a distraction. It's just a distraction, and I think that's the best way to put it. So guys, and you gotta watch out for that. If that's what it is, you gotta watch out for that. And you have to watch out. There's going to be something else that's going to come after this. That's going to try and top the yield of TSOY or the yield of Coney, there's going to be something else to take its place, and there's always going to be something right behind it. And you've got to watch out for that stuff, or else you'll just be chasing your tail and just continuing to chase the next shiny object. And that's not what investing's about. So don't do it. Don't do it. But yeah, I think that's a pretty good place to wrap it up, guys. Actually, one thought though, wrapping all of this up, there's some of you guys out there, like at the start of the stream, I don't remember who it was, but you put $15 into TSLY. That's okay. If you want to put a little bit of money into something like that, just fun money, money that you're okay with, whatever happens to it happens. You're okay. Just think of it as like, coming to Vegas and putting $15 on red or black. Just think of it in that same way. If you're okay, like doing something like that with that money, then give it a shot, but do not, I just would caution against basing your entire investment thesis and your entire portfolio around assets like this. You look at it and think that it's going to be a shortcut to financial freedom, a shortcut to retirement, but I don't think the future will be as rosy for these 10, 15, 20 years from now. I don't think that they'll look as attractive as they do today. And I don't even know if they'll be around. Who knows? So I would just really caution against anything that looks like that. Yeah, I don't know. I don't know how else to put it. So, I don't know. So anyway, guys, I think this is a pretty good place to wrap it up. On that uplifting note, I think this is a pretty good place to wrap it up. But I want to thank you guys so much for hanging out with me again for the second night in a row. This is a really fun stream. Sometimes I really just enjoy, just not having a plan. Sometimes no plan is the best plan. And so I might do some of these more often, just these livestock research sort of things. And let me know too, real quick in the chat. Did you enjoy this? Like, do you enjoy this this sort of format for the streams? I know sometimes we come, and most of the time we come and we have some sort of topic that we're talking about, like last night. But personally speaking, I really enjoyed doing this. So let me know your guys' thoughts. Let me know if you enjoy this. I'm curious, and if you have a preference either way. So yeah, Anthony likes it. Good to know. Cool. If Anthony likes it, must be good. Gio says fun times. Peter's on board. Yeah. Okay. Well, maybe we'll do like one of these per month. I don't know, 1 or 2 per month. I don't know. We'll figure it out. Yeah. I was doing dishes and lost track of time. I love that. That's great to hear. Cool. Awesome. Walt's Worm. First time here and we'll be back. I'm glad to hear that. Thank you so much. Charles says, heck, I didn't know you had a live last night. Yeah. Well, I knew that was going to be the case. I knew there was going to be a lot of people who didn't know there was a stream last night. And I did post about it make a community post about it. I put it out on Discord. I put out the bat signal, so, but I knew that there was going to be a handful of people who didn't even know what was going on and wouldn't be able to make it last night. So I'm glad that we did this tonight. So thank you guys for hanging out with me again. So, yeah. Okay. Well, good to know. I'm glad to hear that you guys enjoyed this type of format. It's just more laid back, more low key. And I think that coming into 2024 with these streams, I think I'm going to just kind of make it more like this, a little bit more loosey-goosey, a little bit more free flowing. Cause to me, that's hanging out with you guys in the live chat and just kind of bouncing off each other and seeing where it goes. That's really, to me, in my opinion, that's really what this is for. Just hanging out, that's what happy hour really is. So I don't think it always has to be this huge prepared ordeal, but I'm glad you guys enjoyed it. Once again, thank you all for the support. Thank you for your time as well. And I hope you guys have a fantastic weekend. And be sure to tune into Sunday's video. I've got the first portfolio, well, actually the last portfolio update video of 2023 coming out on Sunday. And then on Wednesday's video, I have a very special video planned for you on Wednesday. So I'm excited to get into that. And to close it out, I do want to answer this last question from Mr. Nick here, who says, did you ever imagine your channel would get to where it is today? Absolutely not. None of this is planned. This has all been just in the same way that building a portfolio step by step, brick by brick. The channel has been very much the same. A lot of trial and error, a lot of learning along the way. And I never imagined that I would be doing this at the to the extent that I am. But I'm extremely fortunate because I could not have asked for anything more. I absolutely love this. So thank you guys, because it's really all because of you guys. So, but with that, guys, excuse me. With that, hope you have a fantastic weekend. Be sure to tune into Sunday's video. Hit the thumbs up button on this video one time if you enjoyed the stream. Hit the subscribe button as well. And I'll see you guys in the next one. Stay safe out there and have a good weekend.